Plays.com blog and is a Seeking Alpha contributor and a Dow Chemicals investor. And Andrew Brady, the senior analyst of chemical metals for Credit Sites, and Robert Westfelt, the editor-in-chief for Chemical Week. Good morning, gentlemen. Thanks for being here. Todd, let me start with you. You heard what the numbers came in at. The revenue shortfall was pretty tremendous as well. What happened?
Well, it's pretty obvious that the global economy pretty much fell off a cliff in December. I think the earnings release said Dow ran about 44% capacity for December and 65% for the quarter, which they haven't done in 25 years. So things pretty much came to a standstill, and Dow manufactures things. And if people aren't buying items and people are cutting back, that's going to directly affect Dow. One good news in the report was Dow AgroSciences had a record year and did increase for the quarter over last year, and inventories are at really low levels. So if you believe there's going to be a second half recovery this year, Dow should experience a pretty swift recovery on the production side.
Andrew, why is this company so important to us? Why is this earnings release? Because look, the stock's down 7%. This says something about the economy. What does it say?
Well, I think there's a couple of factors going on. I think you have the economy slowing down, like Todd said, and then also there's an inventory destocking phenomenon with oil prices falling. Prices are falling, so guys are trying to hold out as well to get lower pricing for the first quarter. So it's going to be hard to kind of strip out the two effects, but it says both things, I would say.
And Robert, look, they have two major headwinds here. One is a deal that was supposed to be with the Kuwaitis. Number two, a deal here in the works with Rohm and Haas, which is in all kinds of legal trouble at the moment. First, walk me through this Kuwaiti situation. Why is this so important, and what has it done to the company?
It is important because they expected proceeds of over $9 billion, which was going to be used to fund at least half of the Rohm and Haas purchase. So that's why the collapse of that deal was important, because that calls into question their ability to go through with the Rohm and Haas deal.
And as I understand, Robert, some have suggested that perhaps they sell that commodity end to their business. Some say $7.5 billion in this climate with oil now where it is. Obviously, the value changes. What's the latest on that?
It's just too uncertain. It's a tough market to be selling assets in right now, so it's just not clear what kind of value they would get or who would be interested in this type of market.
Todd, it seems like the perfect storm for them, a combination of this Kuwaiti deal falling apart, the situation with Rohm and Haas, which 6 months ago seemed like a reasonable deal, and now it's not that reasonable given the current climate. Where does this stand?
Well, right now Rohm and Haas is before the court, and the court has discretion in the equity that they can decide on. So they can say to Rohm and Haas, yes, Dow has to complete this transaction, which Dow still wants to do, by the way. But they can come back and delay the equity and when they have to close it. So they have a wide range of remedies that they can resolve this with. So will Dow do the deal? I think Dow's going to have to do the deal. Now, if the court gives them time and they can sell these commodity businesses, and they are talking to several buyers right now, then everything washes out and everything's fine. It's just a question of timing. Does it happen now? Does the Rohm and Haas have to happen over the summer, in the fall? And can they sell these businesses and get cash for them in the meantime? If they can, then things will be fine. If they're forced to swallow Rohm and Haas now, it's going to be bad news for shareholders. It's going to be bad news for a lot of people, because the debt burdens, the credit rating agencies, they're all going to come down on the combined entity. And I think, based on what the judge said in his remarks at the hearing, he recognizes that and said, this is a business problem, and business people should solve business problems. He's kind of saying, you're big boys, go solve this, because if I have to do it, neither one of you is going to be really thrilled with the outcome.
Yeah, and Andrew, let me jump in here. Todd raises some very important points, which is they run the risk of their debt being downgraded. Number two, the CEO just a little less than a month ago said, we've never touched our dividend in history. We have no intention of it. About 2 to 3 weeks later, he said, you know what, we might have to cut the dividend. So it's pretty clear when you look at this report and what he's been saying, the fact the stock 52-week high was at $43, that things are pretty bad here. How do they turn the story around?
Well, I think the problem they have is, I think the big thing that people need to focus on is they have that term loan that from the financing of Roman Haas that expires in 1 year, which I believe is going to be January 2010. And then they basically have to either use proceeds to pay it down, or they might have to cut the dividend to keep the credit ratings high enough where they can refi this thing, or they may have to issue equity to pay it. So I think they're not driving the bus anymore. I think they're just reacting to the market conditions at this point.
All right, gentlemen, we're going to leave it there. Thank you guys so much. I appreciate it.